Welcome to our weekly market analysis. This analysis for the week of April 26, 2025. The events we want to consider for this coming week is, I think the most important economic news will be the non-farm payroll right before the FOMC meeting the following week. So this coming Friday, we have the non-farm payroll. Also be aware on Monday evening, April 28th, we have the Canadian election. We will take a look at the Canadian dollar to see how it's been behaving. Also, a major earnings week for four of seven, Mega Seven, or Magnificent Seven, I should say. Magnificent Seven are coming up this coming week. So watch for Apple, Amazon, Microsoft, Meta earnings. And then I've talked about this before, but be aware we have something called an event called Turnaround Tuesday when we have big moves on Monday, whether it's up or down. Generally, Tuesday goes the other way and it fades it. So just be aware of it. I probably will do a lesson of the week or lesson of the day on this based on the statistics that we've had. As far as economy, as I mentioned, I think the biggest news for upcoming week will be the non-farm payroll. The expectation is about 129,000, and unemployment rate will stay at 4.2%. As far as the interest rates, we can see the 10-year US notes and also UK gilts have been actually coming down. We see that the steepening on the long end of our yield curve. We see that the 2-year, 10-year is at 50 basis point, but it's the 30-year and 2-year is like at 100. So that has been steepening. And basically, it was one of the second best week that we've had in the past year. Nasdaq was up almost 7%. S&P was up 4.62%. Dow was up 2.48%. Gold is taking a little breather. Basically, it's flat. We will look at the charts. Copper was up 3%, and crude oil has been down again. We will discuss that. Why is that? It was down 1.65%. We're still not out of the woods, but we're getting close to that. We still, just a tiny bit, we're in the correction zone. Dow is down 10.6% from its highs. S&P is right at 10%, and NASDAQ is at 13.3%. Overall, the whole market, they did 4.63%. What we see is that the large mega cap growth, and again, we have the Magnificent Seven, they were up almost 6.7%. So that has been the strongest, while the large cap value has been actually the weakest. When we look at all the markets, in some crucial point, industrial is right around this 20-day moving average, but we've had the death cross and we're still below the 50 and 20. The good news is the S&P has broken above the 20-day moving average. That's important. And but this 50-day moving average right around the 5,500 is crucial. So I would pay attention to 5,600, 5,580 area. We will discuss that. So be aware of that. Also, NASDAQ has broken above its 20-day moving average. So has the Wilshire 5000. But we see the yield after jumping a couple of weeks ago, they have broken below its 50 and 20-day moving average. Dollar still, well, it's below, but by tiny bit, my support of 99.76. So we'll look at the chart. So the dollar has been still weak. We had a little bounce, technical bounce. And then we see the crude oil touched this 20-day moving average, got rejected, and gold has been doing obviously very well. The above its 20-day moving average, is above its 50-day moving average. And VIX has actually dropped after being very volatile a couple of weeks ago. It's right on its 50-day moving average. As far as the sectors, we see that now discretionaries, such as Amazon, Teslas of the world, have helped to move above the 20-day moving average, but that 50-day moving average is crucial. We see communication, the strength has come back on the risk on sectors. Technology right under its 50-day, above 20. Industrial above the 20-day moving average, but still under 50. We even see the basic materials above its 20. Energy is still struggling. It's under 20 and 50. Staples, they are just hugging their 20 and 50-day moving average. Healthcare is against its 20-day moving average, just touching it. Utilities and a flat, really moving average of 20 and 50. And financials have broken above the 20, but under 50. And real estate is above its 20 and below 50. Internationally, we see the EFA, the Europe and Australia and Far East, all they've done very well, broke above the 20, now 50. Emerging markets is right against this 50-day moving average. We see Australia, we see Austria, a lot of strength at a cost of what is happening to the dollar. So there's that movement. We see Canada, a big bounce. But on the other hand, China, well, with what's going on with the tariffs and also internally, there's a lot of questions. So that's sandwiched between the 20 and 50, but a lot of international markets, they've been doing very well. Sentiment still is staying very negative with the AAII members. Again, concerns about consequences of the tariffs, although we've had the 90 days, but well, we already passed almost 3 weeks of it, but there is still concerns about a major slowdown, not only in the United States. The concern is obviously US being the biggest consumer market. It's about international reactions, what happens globally. So the sentiment is down. It's almost where we were April 2nd at 21.9 bullish. Our bearish is at 55.6, again, way above average and a little lower than where we were again in April 2nd at 61.9. Our CNN Fear and Greed Index has moved. Remember, we were at 4, so we've moved to 35. It's still at fear, but again, I pay a lot of attention when it's at the extreme. When you look at the Citigroup panic euphoria, we see that, well, we finally have gotten away from that euphoria. We are very much in the neutral zone. And I go back again to our Fibonacci, and I want to pay attention to these because they give us, again, the pivot points, the points of interest, the lines in the sand, where we want to target, where we want to have our stop losses. And basically, you see, even last week, we came to our basic support from August and we bounced back. And now we have entered the ambush zone. An ambush zone can go either way, which is 61.8 and 50%. We'll see if we can continue and go at least hit the 50% so 50% line, and or will we have this up and down, or will we be rejected? So basically, is we can see this has been a pretty strong resistance now. Well, it used to be support, so it's been a resistance. So let's see if we can break that. When we look at the moving averages, one of the things I use, again, especially if you do swing trading, we pay a lot of attention to the 8-day. 8-day gives us, at least on a short run, where the direction will be. So this past week, we actually broke and got confirmation above the 8 and the 21. The big question is this 50-day moving average. So we want to pay attention to this. Again, the 5,600, 5,580. So that's the zone we want to watch. One concern has been the volume has been very subpar. It's been not very convincing. So is this a bear market rally? Does this have legs? So the earnings have been actually okay. Forward guidance, obviously, there are a lot of concerns. So again, this is a big week when it comes to the earnings. When we look at on a daily basis, as I mentioned, we have broken above the 18. We're oversold. Now we are overbought. MACD is positive, but we are overbought. So watch the resistance and at least the Bollinger Band. When we look at the weekly, well, we hit the support, broke below the 100 week, and we bounced back. So that was a good sign. We were oversold on weekly, we bounced, but is this an oversold bounce? So we want to be again a little concerned. So we are not back in a bull market. Let's put it that way. So we still got to be cautious. When we look at Nasdaq, nicely broke above the 18-day moving average. MACD is positive, but we are overbought. So be aware of that. On a weekly basis, we had broken below the 100 week and we were weaker than S&P. Now we have one bar has broken above on a weekly over 100 week. And we have shaken the oversold situation. We really like to move above the 50 number on our stochastics to get some momentum. When we look at the Russell, that has broken above the 18-day moving average. We are looking overbought, although MACD is positive. And then Dow is the only one hasn't broken above 18. It's just really having big resistance. And also it's overbought, although MACD is positive. When we look at transportation, that's also really touching its 18-day moving average, overbought. And then the VIX, we mentioned, really doesn't stay more than 1 or 2, and in this case was 3 bars outside its Bollinger Bands, came back in. The good news, it has gone below that magical number 30, but we're still above the 100-day moving average, although we broke below the 18-day moving average, but we are oversold. On the other hand, when we look at VVIX, the volatility of VIX, we broke below the 100-day moving average. So again, and we are, on the other hand, we are oversold. If we have one day more, then we will be embedded. So we want to watch that. The yield after really hitting the 100-day moving average, they got rejected. We just broke below the 100, below the 18. MACD is about to cross. That's good news. On the other hand, we do have divergence as far as the stochastic. So the good news is that the yield are looking lower. On the other hand, we see the 10-year note also moving above its 18-day. We need more confirmation. MACD is about to go positive. The same thing with 30-year, except again, the crosses of 18 and 100-day moving average. So we have shaken the oversold. This will be a big move. Remember, the FOMC meeting coming up the following week, not this week, so be aware of that. The dollar, well, it's been weak. Last week we touched on that, and now we are right against the 99.75. My really now it's resistance. It used to be my support. So we are oversold. MACD's almost wants to, is still negative. We are under 18-day average. So let's see if we can move up, but right now, still negative. When we look at euro, the opposite of obviously the dollar, although we are overbought, and now we can see MACD hasn't crossed, but it's getting closer. And again, we touched that the Bollinger Band, and we are again. It's almost like a wait and see game right now. I want to talk a little about the Canadian dollar. As you can see, it has had a strong rally in past 2 weeks, broke above the 18 and 100. We do have a golden cross. We are embedded. MACD is positive, although it's getting closer, so we want to watch that. But again, it's wait and see. There is tomorrow, we have the Carney MPTA. It's like the liberal side has, they're up, I think not by 3 points. So, but anything can happen. So the conservative have been getting stronger. So that's something you want to pay attention for many reasons. I think there has been a wait and see on the tariffs in Canada. But the Canadian dollar is, as I mentioned, it has been waiting. Their market has done very well. Again, the dollar has been weak. So right now, the Canadian dollar looks good. As far as uh, gold, it has been strong, but we can see we had this railroad track. We were hugging this Bollinger Band, which is positive, and now we just needed a breather. We became overbought, and now the momentum has turned. MACD is still positive, but we do have a support at 32.14 on an 18-day moving average. So I would not short gold market. I think this is something has fundamental reasons for it. But I've said it before, whenever we touch the Bollinger Bands, it's a good idea to take a little bit of profits. When we look at weekly, it's a beautiful chart when we see expanding Bollinger Band and actually really attaching to it. So we don't go outside of it all the last 2 weeks. We did a little bit, but it is actually positive technically, and we are embedded. MACD is still positive. So be aware of that on a weekly basis. Silver on a daily, above the 18, above the 100, but we are overbought. When we look at the copper, copper had really nice breakout of this 18-day moving average. And one thing we want to be careful is, again, it is overbought. So we want to watch that. As far as Bitcoin, well, it's been strong. And now this is a, hmm, it's interesting. This numbers, this doesn't make sense. I have to check this. So let's, okay. I thought we had gone way before. So I have to check this chart. So we will look at it on our expected moves. So crude oil. Crude oil, what we see is, again, I had this support at 64. We broke through it, came back and bounced against it. An 18-day moving average had been a resistance. Again, there are a lot of concerns. Of course, the slowdown with the economy in the United States, the production. Also, what happens if there is these two things? What will happen with the Iran deal? What will happen with Russia, Ukraine? Will there be more sanctions? Um, if there is some kind of a closure, then we will have a lot more supply. The fear of recession, the lack of demand. So basically, that's why we are really struggling. And we are not overbought yet. The momentum was positive last 2 weeks, but we do have these really big resistance ahead of us. Now, expected move, it was really interesting how almost every one of our, almost most of our indices, they did go hit the lower edge and bounced back. Now, it was really strong last 2 days, Friday and Thursday. So S&P actually was way outside its upper edge of expected move. The same thing with NASDAQ Monday. And I talked about the turnaround Tuesday. You see how low we went on Monday, and we gapped down, and then boom, next day, strong move, and we broke. Wednesday, we had, we stayed right at under upper edge, but we broke above that. The same thing with the Russell, hit the lower edge, broke above, and interesting on the Dow. We touch right the lower edge, and then we are right on the upper edge of our expected move. We see the bonds very much respected. Again, this would have been a nice butterfly or iron condor. You see how nicely it respected both edges. And then we see gold did the opposite, did go outside this upper edge, hit all-time high, came back and touched it's the lower edge. Silver been, stayed above the upper edge, and then Friday came back inside. And then when we look at financials, kind of similar, hit the lower edge and then closed above the upper edge. Energy touched the lower edge, but a little above the midline. And then crude oil right where it started, kind of a little lower. And Bitcoin, this is much better. I don't know where the numbers have changed. I think we are moving with the rolls, but this is, we are 94. I mean, the objective is we could go back to 100, but this is a way big extension outside this expected move. So with that in mind, I hope that was helpful. We will move on to our trade of the week. Thank you so much.